The markets are down. What you gonna do? I know you're panicking, especially if it's the first time that you're experiencing this level of drawdown, where it's 30%, 40%, 50%. It's tough. It's tough. And the most common question that I get is, what should I do? Should I buy more? Should I sell and take a loss? Or should I just hodl, hold on for dear life and hope for the best? Well, I'm gonna give you a real life example where I took an 85% drawdown and exactly what I did and how it played out. And you can apply that lesson to every single position. So if you like today's video, hit the like button, subscribe, hit the bell notification, because I want to bring this daily wisdom to you. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading currencies for over 15 years and I bring that knowledge and wisdom to crypto. I was featured in this best-selling book, High Probability Trading Strategies, back in 2008. And I love this stuff. So let's jump straight in. By the way, quick shout out to Timmy51. He said, Jagir, you tend to lean forward a lot and I see the top of your head. I don't mind looking at the top of your head. It would be a good idea to put your computer higher up. So today we got the computer higher up so I can look like this. So I've got a little presentation for you. I did this in one of my lessons for some of my students and I thought it would be great for you. HODL. First of all, the meaning of HODL. Well, it comes from the term HODL, H-O-D-L, is to avoid selling. It originated from Bitcoin. Avoid selling Bitcoin despite fluctuations in price for fear of losing out on the future profits, to make a good long-term investment. So hodling just means holding long-term. So I'm going to give you an example where I invested in a company called Lido, as in I bought the underlying token back in January. It's a really, really strong project. It's liquid staking, so you can stake your Ethereum for Ethereum 2.0, but it gives you Ethereum back. It's called, I think it's called SETH, and you can use that on the open market. Very, very strong project. Backed by many VCs, Coinbase Ventures being one of them. And when I see that, I go, right, this looks like a really strong project. So when I actually invested, this was the chart. It was a really new project. This was the chart data available to me. So I'm just going to pull out my laser, because though this is now in hindsight, I'm going to show you exactly what I did, whether it's for Kusama, Polkadot, ADA, whether it's Uniswap, whether it's Bitcoin or Ethereum, and your portfolio's down, you might be thinking, what should I do? So this is what I did. So initially, if you see my videos before, Elliott waves, I'm going to cover a bit in a second, how Elliott waves work, but as a chart pattern, it's not real detailed technicals because there's not enough information, but it was a nice move up, a bit of a pullback, and I saw that as a great buying opportunity for a young project. Why? Because it's only, I think it was 36 million market cap. For a project with this level of strength, it's easily a $500 billion project for what it's doing. Potential, that is. So quick recap. Elliott waves, markets, is mass psychology. Buying and selling, fear and greed, optimism, pessimism, short-term voting based on buying and selling. And markets tend to move in a 5-wave structure more often than not, and then do a 3-wave correction. And you'll see that again and again. And 50 to 70% of the time, these patterns will be evident. And I'm always looking for these patterns. So this is a typical wave structure that unfolds. I'm not going to go into detail. The main thing is, when I was looking at the Lido position, I saw it being in this zone here, this kind of zone here with a potential upside movement. And I always like to buy at a wave 2 low, near a wave 2 low, to ride a wave 3 and possibly a wave 5 as well. So that's where I saw Lido. But this is what happened. I purchased my position in this zone where I thought this was around a wave 2. But look, the market provided more data, made a move to the upside, and it pulled back further. Now, because Lido wasn't on exchanges other than decentralized exchanges, there was no stop losses, there's no limit orders, just buy the underlying token. And when it's low market cap, you can get enough leverage to make some really good returns. So I had to readjust my thinking, go, okay, it looks like it's making a deeper correction, a wave 2 have to move down to here. That's just the name of the game when it comes to technical analysis. Not about being right. It's about getting the probability in your favor to minimize your risk and maximize your upside. And then this happened. Oh Lord, right? No one wants to see this happen. Where I thought it was a wave 2 down here, potential, it just kept on going down and down and down and down and down. So market cap, 36 million, bought at roughly $2.88. That was what potentially looked like a good buying position. Is in at the time, remember, no one has a crystal ball, but we have to just make our investment decision, trading decision, and go with the flow. but then the price tanked. Like if you think you're experiencing a 20%, 50%, 60% drawdown, all right, look, the price went down to 50 cents from $2.88 buying price. Now, that's not nice for anyone, right? But that's the name of the game that we're in. That's why you always got to minimize your risk, maximize your upside. That's why you need to take profits and take your money off the table where you can become risk-free and only risk what you can afford to lose. Because look, this can happen and it will happen. And it's happening right now. So the drawdown on this particular position was 83%. 83%. So to put it in monetary terms, if you had put in $5,000 at $2.88, just a few weeks later, what was it? Let's just see the date, if I can just remember. January, early February to March, so like 4 to 6 weeks, 83% down is $4,150 down if you invested $5,000. Just put in $5,000 as an example so you can kind of comprehend. So that means your $5,000 would now be worth $850 on paper, as in running P&L, right? If you're like me, that's how I felt. That's how I felt, right? But look, that's the game we're in. Some shoot up, some correct, some do this. So then the question that I'm getting asked the most, whether it's Kusama, whether it's Polkadot, whether it's Bitcoin Cash, whatever position it is, whatever market that you're trading or investing in, what should I do? Should I be, what's the term? Adding to my position? Forgot the term, it'll come back to me. Should I be selling and taking a loss, or should I just hodl? Should I just hodl? Dollar cost averaging, that's it. Let me say, as the price goes down, buy more. There's pros and cons to that. We won't go into that today. But let's just look at what happened, right? So Lido, backed by Coinbase Ventures, really, really strong project, still young. So I made the decision down here to hodl, to say, look, I believe at some point in the near future, money finds the strength in a project. The weight of a project long-term will find the project. So as long as I don't sell, I don't take the loss. So for this particular position, I said I'm holding because of the strength of the project backed by Coinbase Ventures. They're solving a really big problem, which is liquid staking for ETH 2.0, the transition that's happening. It needs a lot of Ethereum to be staked. But one of the downfalls is you need 32 Ethereum to stake, but Lido allows you to stake any amount of Ethereum and get the same benefits. That's one of the keys. So what happened? Just hodled. Then the market recovered. It went down, it went back up to $2.85 from $2.67, $2.88. It was roughly that price range. So it recovered, right? And then you have to make a decision. So I'm going to show you in a second then what I did, because, what do you do here, Jagir? Do you just sell and go, oh, thank God, I got my money back? Or do you wait patiently and still believe in the underlying project and ride the wave, right? That's what we're going to cover in a second. But the quick lesson here is, what did you learn? No one knows, right? We just go with high probability. That's the game that we're in when it's investing, whether it's property, whether it's Forex, whether it's stocks and shares, whether it's gold, whether it's Bitcoin, whether it's any other cryptocurrency, any investment. No one knows. We just go with the probability, right? Why do people put their money into something like a savings account or an ISA? Well, it gives them a much higher probability that the money's going to be there, but they're only going to get 1%, right? 1% return over a 1 to 3 year period. Where there's more uncertainty, the risk reward ratio goes up. You might have more risk, but the reward is you can get a 20x, a 50x, a 100x, and so on and so forth. Again, only a probabilities game. Don't panic. It's a normal part of the markets. We're in an infant market called cryptocurrency. We're only 10, 11, 12 years in, and some of these projects have only been about for, Lido is less than a year, right? Lido is less than a year. That's infant. It's a baby. It's a baby in the grand scheme of things. And it's all about risk management, right? When can you take your money off the table so you're risk-free, so you can hodl? So let's jump out of this and let's jump into a chart. I'm going to jump into DEX tools, which is what I've used for Lido. So Lido, I think I'm pronouncing it right, L-I-D-O. The ticker symbol is LDO. Here, this is what we experienced, right? What I showed you here. We bought around here. The price moved down. And then if I just drag it to the right, the market recovered and it got to around here. So the question is, what did I do next? Well, as I showed you earlier, right? If I just quickly recap, right? Markets typically move in 5-wave structures. So I'm always looking for a minimum of 5 impulsive waves. And when I see that 1, 2, 3, 4, 5, if I ever see a clear pattern like that, that's where I want to sell. Yeah, and then I'm going to show you exactly what I did and what price I exited at, because I did exit Lido. I did. So the market moved up, nice. It recovered, so I'm currently break even at this point from roughly, it was late January when I bought. It was around here, till late March. What's that? I'm sorry, not March, April. There you go, February, March, April. So around 3 months. I had to hodl for 3 months. That's 12 to 13 weeks. Is that a long time? Is that a short time? It depends on your perspective, right? Is that a long term, short term? You know, depends on your perspective. Some people, a week is long, and some people 10 years is long. Yeah, so it all depends on perspective. But it was 3 months that we hodled for this. And most of that was at a loss, right? Most of those 3 months, we were down 20%, 30%, 50%, all the way down to 85%. Now, a lot of people, what you'll find here is market recovers a little bit, like, 50% of your position might be recovered, and then they'll sell. And that's okay, but it depends on the underlying project. With Lido, it's strong. Being backed by Coinbase Ventures is no joke. So when you know VCs like Coinbase Ventures is backing a project, it gives you a lot of extra confidence, right? Because VCs add so much credibility to a project because they put in not only their name to it, but they have real money to it. So they're expecting a higher level of return over the next 1 year, 3 years, 5 years, 10 years. So they're in it from the bigger perspective. So now let's just look at what unfolded and exactly what I did and why I did it, right? So if I just pull the market, the price data, this is what happened. Eventually the price went from 280, give or take, to 50 cents, all the way up to around, the high was almost $6, right? $6. So what did I do? Well, I saw this 5-wave structure. 1, 2, 3, 4, 5. When I see that, I do my Fibonacci ratios. If you haven't seen me do that, you see it in many of my videos. Basically, it measures the psychology of the market. And this wave 5, especially when it's this deep and it's bigger than the wave 3, is traditionally called panic buying. Panic buying, where people have fear of missing out, FOMO, and they're FOMOing in. They go, wow, this is really taking off. This is going to the moon, and whatever else. And when it's that aggressive, I go, okay, it's time to take profits, because, even though we got in here, there's a lot of people that got in here, and there's gonna be a massive amount of profit taken here. So the typical Fibonacci ratios, let's just do some projections. This is what I did live at the time. I'm just showing you back in hindsight now. Again, we're using DEX tools, because I don't know if Lido is listed yet on any exchanges. Should we quickly check? Let's have a quick check. Lido's CoinMarketCap. Oh, it is now. It is. It's on who's big exchange in Asia, but it's mainly on the decentralized exchanges. So when it's mainly on decentralized exchanges, to get the data using DEX tools can be very, very handy. So let's do these extensions, price extensions. So we're gonna measure this wave 1 to wave 3 and project it from wave 4. And the most common price projection, we're only going to do this one, of the typical maximum, I'm going to make it nice and big and bold, make it even bolder, is this 100%. This 100% of wave 1 to 3 projected from 4 is the typical maximum of a wave 5. So the price has reached this zone. So here it's overextended. So I'm ready to sell. So I put my price, I think I went to a 4-hour chart. I just said when the price goes below a 1 bar low, I'm going to exit. I wrote a note here. I exited at $4.78. $4.78. So what's that? $4.78. Roughly, I exited around here. So let's just put this. But it was based on objective thinking. It wasn't a panic. It wasn't, the market's recovered a little bit, let's sell, or the market's gone back to its entry price, let's sell. No, it was just let Lido do its thing. It's a strong project backed by Coinbase. It's only short-term voting, which is selling, that's reflected in the price, no problem. But now that I've seen this 1, 2, 3, 4, 5, which suggests that there's going to be a big correction, at least 50 to 60%. So, I don't want to hold through that position. So I exited. I'm just going to draw. I exited in this zone over here. And then what happened next? No one knows for certain. It could have carried on going up, but I'm always working with the probabilities. But what happened was it did a nice big correction, and it currently sits down here, right? So that's Lido. So why am I showing you this today? Well, you're experiencing this with Kusama, you're experiencing this with Ripple, you're experiencing this with Bitcoin and Ethereum, you're experiencing this with pretty much every single cryptocurrency, give or take, almost every, right? Even Mina protocol, right? Mina launched via CoinList. It's the world's lightest blockchain. It's got some big prospects. It was expected to be a top 20, top 10 coin. I think it will still get there in the near future, but it's been tanking. The price went from a 40x from IDO price initial DEX offering, and it just dropped and dropped and dropped. I think it's like $1.30, and it was trading on the IEO markets on Bittrex, not Bittrex, the one that does IEOs. I can't remember off the top of my head, but it was trading at like $80 to $140, and it's currently $1.34. That's short-term voting, my friends. Short-term voting. So that's what you're going to see with a lot of the projects. So when you're thinking, what should I do? Only you can decide, but it depends. Yes, you can cut your losses. I've done that before with different projects, but it depends on the strength of the project. So something like Kusama, which is solid, Polkadot, which is solid, right? If you can HODL, you should be okay. No guarantees, but you should be okay. So if you like today's video, like, subscribe, hit the bell notification. Let me know what was the biggest piece of value you got from today, because this is a really big thing. And if you haven't experienced a drawdown before, it's really important that you know it's just a part of the game, especially in the crypto space. And if you don't like it, no one likes it, but if you can't handle it, then you got a kind of question of, do you want to be investing in this space? But the main thing is you got risk management, you got trade management, so you can kind of take your profits as you go and then know when the high probability points are to sell. So let's finish off today with a quote. I haven't read this book for a while, but I used to study this book when I was younger, around a decade ago, Think and Grow Rich. And I just wanted to pull out a quote. I thought it was quite cool. Let's finish today on this quote. Without doubt, the most common weakness of all human beings is the habit of leaving their minds open to negative influence of other people. When it comes to crypto, you heard the term FUD, fear, uncertainty, and doubt. Twitter, YouTube, the news can be terrible for crypto in the sense of there's a lot of negative news that comes out and then positive news, and that can kind of shake you. Hence the term HODL, hold on for dear life, but it's just to be believing in the project itself. So it's speculation, yes, but also if you've got belief in the project. So let's just read that one more time and then we'll wrap up. Without doubt, the most common weakness of all human beings is the habit of leaving their minds open to the negative influence of other people. See you soon.